I start straight away? Oh, straight away. Okay, so Happy New Year, everyone. So glad to meet all you guys New Year again. So let's get started. So for today's topic, so inscriptions, what are they? So before that, this is like a brief agenda for today. So first we start out with some announcements and monthly roundup. And later we will have a guest from pitchIN, Nicholas. We'll be sharing about like crypto regulations and token crowdfunding in Malaysia. And after that, we'll jump straight into the main topic of today, inscription, how do they work? Probably around like 45 minutes. And after that, we're going to have some makan and lepak. Yeah, okay. So the first thing, this one is more like a reminder. Like back in 20th of December, there's this previous node workshop foundation, and the application deadline is actually today, 12 a.m. So if you guys have any questions or interested, you can reach out to Nicholas right at the back to talk about hosting a node at your own home. Okay. So next, this one is more for the zero knowledge lovers right now. And it's actually an online Zoom meeting. It will start at the 20th of January, 8 to 10 p.m. And the person in charge is actually Wen Kang right behind there. And also ZK. So those two will be a host. So this is like a series of online workshops. I think it's around 2 months. So if you scan the QR code, it's actually link you to a form to be like whether like you need to be RSVP to join. But let's say if you want to join, you can probably talk to the organizers over there. Yep. So next thing. So this one is more like a university event, also initiative. Okay, so just a little bit of the gist right now. If you look at the agenda, you see like names like CoinGecko, I think Pendle, Request Network, and also it's a mixture of talks and also workshops. So it's a 2-day full event. And also we have a zero knowledge session on the second day as well. Some of these are hosted by our guest sponsors and also people from EduDAO. And yeah, so these are all the announcements today. Right now, I'm going to pass it to Nicholas. We'll talk about the monthly roundup. No. I remember we had a mic somewhere to Check. Oh yeah, there we go. Okay. So then I don't have to shout to the entire crowd. Okay, Happy New Year, everyone, and welcome. Okay, so hope you all had a good break over the year, over towards December. December is generally a more quiet month because everyone in crypto can and should take a break from things. So things tend to get more quiet. There's less news and so on. So we have a shorter roundup. I need to click somewhere. Yeah. I was actually expecting something to happen somewhere today or yesterday. So as in terms of crypto or Bitcoin news, Bitcoin is about to approve a spot ETF, which means that exchanges can buy and sell Bitcoin on behalf of others. So the simple economics of this is that whenever exchanges need to fulfill orders for Bitcoin, because it's spot means that exchanges have to physically own Bitcoin. So that means that, let's say, if what are some of the names? BlackRock wants to have an ETF of, let's say, 1,000 Bitcoins. They will have to physically acquire like 1,000 Bitcoins, which is a lot in terms of the limited 21 million supply. There was actually, I think this morning the SEC's Twitter actually got hacked, and it posted a fake announcement that made the market go up and immediately come back down. But as of today, there was actually no official announcement. But if I'm not mistaken, the deadline is somewhere today. If you convert US time, it's about midnight for us, so you can expect some differences from there to be updated. Okay, then as for Ethereum itself, we had a
we had one of the clients or Ethereum nodes go down, which is Hyperledger. Anyone uses Hyperledger for running nodes? Okay. So that brings on the point that you all should, for those of you who are running nodes, and especially those clients, we were able, only people who were using Hyperledger could not continue for Ethereum. Those of us who were using others like Geth or so on had no issue. So the learning from this is that if you're running Ethereum nodes, consider minority clients. Okay, then as for Ethereum upgrades, the next upgrade is called Denkun. I have no idea why it's named that. I think there was some naming. There's some reason for the naming. Yeah, I think it's places in the world which you combine. So the gist of Denkun is that it will enable Dank sharding, or a simpler way, even simpler way of saying that is that it will make L2 cheaper. So who here has paid more than $50 on Ethereum or 200 ringgit? Yes, many hands. So for those of you who use Ethereum, you would know that Ethereum itself easily costs a good nasi lemak in a very high-end restaurant. Okay, there's no way Malaysians are using this feasibly. So the solution to that is L2, which is, for example, Arbitrum, Optimism, what other L2s, Chroma, and so on. But these L2s still cost approximately 25 cents, 30 cents to send one transaction. So that's the equivalent of, for example, if you use Touch and Go, you go and pay your McDonald's, let's say, for 13 ringgit, and you have to pay 1 ringgit fee on top of that. That's still not the best thing to do. So this Ethereum upgrade would make data more available to layer 2s. So then you can eventually use layer 2s at an even lower gas fee. So for example, gas fees are low to the point that it's almost negligible. Then in that way, you can send transactions more sustainably, because otherwise every time you pay for your McDonald's, you're paying like 10% on top of it. So it's like service charge, government tax, Ethereum fees. So that adds up to like 20%. So this upgrade is coming to testnets first. We're going to test it first, and it's going to run all the way until February. And by then, hopefully, if everything goes well, you can see it on mainnet. So your actual layer 2s will be significantly cheaper. All right, next is a cool feature from ETHScan. And so ETHScan itself, hopefully you'll use ETHScan. And if you've been checking your transactions, you'll notice that there's a new tab on ETHScan, which is called multi-chain portfolio. So the blockchain world is, I would argue, fractionalized, as in there are easily 20 different chains that you need to be on. And for a normal user, let's say if you have balances on Ethereum, you have balances on BNB, Polygon, and so on, that's like going on your phone and checking Touch and Go, Boost, Grab, and so on, and all your bank accounts, and having to figure out which balances or what you have on each account. So what ETHScan has done is it's combined all the balances into one chain. And in fact, one very lucky Christmas user got a free Christmas gift. So he happened to use, if you happen to use ETHScan, then you go into ETHScan, you see your Optimism balance, and you realize that, hey, there's an extra $1,000 there. So some people literally discover airdrops from this. So, but I think the main cool feature is that rather than opening 10 different apps, you can check your balances in one page. So I think it's a good improvement for crypto UX. So the topic of today is inscriptions. I will save the hot stuff for our presenter later. But inscriptions have been going as far as of LinkedIn. So people have literally been commenting this, and this is called an inscription. It's everywhere, which we call the template. It's gone as far as, I think, GitHub. I've seen it on Twitter, I've seen it on Facebook, and now it's coming to my Instagram. So please stop it, learn about it, but don't do it everywhere. Okay, and lastly, for local news, this week, we have recently announced DevCon 2024. So DevCon is the annual meetup of, yeah, okay, you can clap, yes. So DevCon is the annual meetup for Ethereum developers, Ethereum researchers, users of Ethereum in general. And in the past, it's always been in the America, Europe region. So whenever you go there, you need to pay everything 4 times more expensive because of the conversion rate to euro. But now it's come down to Thailand, and specifically Bangkok in 2024, November 12 to 15. So you can block your calendars. It's pretty close to us, and if you can attend, I think this is one of the closest, unless DevCon comes to Malaysia. I think it's one of the closest you can be to experience DevCon, where it's the biggest Ethereum event. The the people who you look up to on crypto Twitter, like Vitalik and so on, will all be there, sharing things, research, all from there. Okay, I think that is the monthly roundup. Quite brief this week, so oh yeah, any announcement? Venue? Oh, I forgot where's the venue.
So this is alpha for ETHKL people. I don't think it's been shared in public anywhere else, but the DevCon teams confirmed that the location is in QSNCC.
What does that stand for?
Queen's Sirikit National Convention Center in Bangkok. So if anybody wants to front run by booking your Airbnbs and all that stuff, you can do that now before the rest of the world finds out. So yeah, cool thing that ETHKL's providing you.
Yes, so it's actually a problem where if you, it's actually a problem this year when we went to Turkey for Dev Connect, where if you book your venue too late, you have to stay like far away and then you take the train for like 20 minutes. But yeah, that's the roundup for December, brief one. Thanks guys. Oh yeah, no?
So right now, can we take a quick group photo first? And later we'll move on to Nicholas' session. So where should we stand? So right here or
This here. Everybody's there.
so guys, sorry to trouble you from standing up. So we're going to head over there to take one quick group photo, and then we can continue with the session. Okay, so moving forward, we're going to pass it to Nicholas from pitchIN to give a topic around crypto regulations and token crowdfunding. Sorry, do I? Okay, over there.
Yeah, I'll mute the mic.
This one you can try. Sometimes it's not very stable.
All right. Thanks for having me here, ETHKL.
Good to see you. Okay, go. Thank you.
All right, thanks for having me here, ETHKL. It's a very good night being able to meet everyone here today. So I think probably my topic is very different from what you guys are used to. It's not technical at all. It's really more on to look at what's happening in Malaysia and also to educate everyone about how are regulations progressing in Malaysia and things like that. So I think maybe I'll just explain a little bit about my background, and then I think you guys can see where I'm coming from when it comes to this topic. So right now, I'm actually with pitchIN. Some of you guys may know pitchIN. We have been around for 6 years or so, been doing equity crowdfunding for the past 6 years. And last year, we have just gotten the SC's approval to do our new business line, which is called Token Crowdfunding. Commonly referred to as IEO, Initial Exchange Offering in Malaysia, in the news as well. Before pitchIN, I actually just joined pitchIN end of last year. But before pitchIN, I actually spent 5 years with the local regulator, the Securities Commission Malaysia, doing various policy and innovation work. I think that's basically what my background is, and I think I'll be sharing from these two perspectives, being in the regulator and then now coming out to try to build the space in Malaysia. So, crypto regulations and token crowdfunding in Malaysia perspective. So I'll go through the slides, and if you have any questions, feel free to raise up your hand or just speak out, but I'll also reserve some time at the end to just take any questions as well. So I think what I will do is probably to start off with a very quick timeline about regulatory developments. Oops. So a lot of words, I know, but I'll just summarize the key points. So I think Malaysia is actually quite early when it comes to regulating crypto. You can say it is good or bad thing. I think as early as 2018, 2019, our regulators, the two main ones, SC and Bank Negara Malaysia, we have started to think about how to regulate cryptos. I think 2018 was more on just warning the people about crypto and just putting down some clarity about what their approach is. 2019 is where I think things really started off. I think it started off with our Ministry of Finance actually prescribing certain types of digital currencies and assets as securities that is regulated by the SC. And I think in Malaysia, one thing to point out is that for this type of tokens or currencies to be classed as securities, it's not really like what the US is doing. It's really just a way to bring in crypto to the regulatory purview of regulators. I think now you can see more and more countries doing it in different ways. Then that's where I think the first regulations was introduced for digital asset exchange. I think SC Malaysia was one of the first country, if not the first, that actually came out to introduce guidelines for digital asset exchange and actually license them to do activities. I think most countries are just starting to do it quite recently, within the last 2 years or so. But Malaysia actually started off quite early. And I think, as you guys would know, we have 3 exchanges approved in 2019 and another one somewhere in 2020. And then after that, in 2020, so after Malaysia have introduced regulations for the exchanges, we've introduced 2 more framework, which is one called Initial Exchange Offering, which is essentially what my company is doing token crowdfunding essentially, which I'll explain a little bit more what that means, and DAC, which is custody, digital asset custody. And in 2020, also quite groundbreaking is that our SC's Sharia Advisory Council also resolved that basically, in not too many words, investing in registered DEX is Sharia compliant. You can do it, right? So 2021, I think I'm not sure if you guys are familiar with Travel Rule. It's something that has been sort of quite popular, quite talked about globally. 2021, we've also started introducing Travel Rule for reporting institutions, including digital asset platforms. I think that's why when you use some of our regulated platforms, you'll see them asking for certain information before you can transfer tokens out of their exchange. And 2022, our tax authority, LHDN, actually introduced a guideline on tax treatment for digital currency. You can have a look. I'm not a tax expert, but in summary, essentially your crypto will only be taxed if it's an income. And they talk about how to consider crypto as an income. Depends on your frequency of trade, your intent, and things like that, right? And if it's a capital gain from crypto, essentially it's not taxed because Malaysia don't have capital gain tax yet. I know there's some developments this year, but so far I can tell the capital gain tax that's going to be introduced is for unlisted shares. So far I can tell until there's new developments, it's not going to be applied to your typical crypto. And 2022, we introduced a broker model for digital asset. Essentially, it's instead of you buying and selling crypto on the exchange, you can see your price and you can just click buy or buy crypto with the quoted price from an exchange. And 2023, I think this year, a lot of new players, I think a lot of countries are doing the same as well. We actually approved, sorry, it's supposed to be two digital asset fund manager, which I'll share a bit more later, 1 new digital asset exchange, and 3 digital asset custodian. So I think this year we have a lot of new players trying to set up. So, sorry, not this year, 2023. Last year we had a lot of new players being approved by the SC. So this year, you'll see a lot of them making headlines as they start their business operation. And I think you guys are also aware that there have been a lawsuit case end of last year against Luno. And the court essentially ruled that for digital asset exchanges or platform, they have a duty of care to customers. So basically, it's a win for investor protection. So that's essentially a very quick timeline from 2018 all the way to 2023, what has happened in the crypto regulation space in Malaysia. I think you'll see Malaysia started quite early, I think, which is a good or bad thing. My view is that we went on a very different trajectory from other countries. I think for us, we started off a lot of people, a lot of different players in Malaysia, and then we put up the gate, and then after they left, right now we're trying to get them to come in. So whereas other countries, they open the gate, everyone has set up shop, and now they're trying to kick people out, right? You can see in Singapore and a lot of other jurisdictions as well. So I think you can see Malaysia is in very different trajectory. There's pros and cons to both approach, but this is what we have in Malaysia right now. So in terms of who are the regulated players in Malaysia, so these are them. So IEO operators, ourselves and KLDX. So this is where essentially your launchpad, you can think of this as regulated launchpads, which we can do ICOs or STOs or in anything in between. So that's your primary market. Secondary market would be your digital asset exchange. The 5 exchanges, Luno, MX Global, Synergy, Tokenized Exchange, and Hata. I think Luno is the one that people will be familiar with. Hata is newly approved by SC, I think this year or end of last year. I don't really remember. The rest are actually doing more of a B2B type business rather than retail focus. 2 digital asset fund manager. Halogen, I think they have launched their Bitcoin fund last year and Ethereum fund this year. I know the Ethereum fund is planning to have some staking feature in it as well. So that's interesting. Crosslight Capital is more of a hedge fund, a crypto hedge fund. I think they invest in futures and also listed companies that are working in the Web3 space. I don't think their products launched yet, but they've been approved to do those activities. Digital asset custodian, we have 3. Co-Kips, I believe they were all approved around the same time, end of last year to early this year. I think Co-Kips is already operational. They are already live, taking business. The other 2, they got the approval from the SC. They are sort of preparing to go live. I mean, this is just, you can find this on the SC website as well, so I won't bore you to death on this. But I think I'll just like to spend the next 2 slides just to talk about, or to clarify some common misconception on regulations in Malaysia. I think the first thing is that a lot of people, at least people that I've met with, probably not you guys are more aware, more familiar with the space, but a lot of the people that I've met on the streets and random events, I think they have this misconception that SC or Bank Negara regulates Web3. Right? It's like anything you do related to Web3, you have to answer to SC and Bank Negara. But in reality, that's not the case. Right? So essentially, there is no one regulator that regulates Web3 in Malaysia. In fact, SC and Bank Negara, and if you want to put in LHDN to come in as well, what they do is they regulate certain activities in the Web3 space that is related to capital market or fundraising and payment. Right? So if you're doing an activity that does not actually touch on these areas, you can do it without worrying about regulations. So what do I mean by that, right? And I think what the SC and Bank Negara regulates actually does make sense, which I'll go through with you in the next point over here. So some of the activities that the SC actually regulates is, first of all, if you are taking money from someone, from the public, and promising them something in return, whether it's returns or saying that you're going to do something for them, I think common sense would dictate that you want someone to be able to mediate that relationship, right? You want to make sure that the person taking money actually fulfills its obligation. So that's one thing that SC regulates, which is the IO operator side of things. Number two, if you are operating a market for trading, and the reason why this is regulated is because oftentimes if you look at, even in a traditional stock market, there are instances of market manipulation, right? And which is why the second thing that SC regulates is actually exchanges that operate the market. We don't want them to do front running of trades. We don't want them to manipulate the market and things like that. Third one is if you are doing a business of you are holding someone else's asset on their behalf. Like say, hey, give me your asset, I'm going to hold it, and if you need it, I'll give it to you. I think that's also an activity that most of us would want someone to actually be able to hold the person accountable, the person taking your assets. And that's the third thing that SC regulate, custody. And also just to clarify, self-custody wallet, like your MetaMask and whatnot, because you're holding your own assets, SC doesn't regulate that. Right? So not all wallets or custody are regulated by SC. Fourth is if you are pooling people's money and say, I'm going to invest in something, right? And that's also something I think common sense would say that we all want at least someone to be able to hold those type of people accountable, and that's where fund managers comes in. And lastly, if you use digital asset as a means of payment, that is also something that's subjected to Bank Negara's policy, which I'll be honest is a bit of a gray area right now. And lastly, I'll just maybe share a little bit about examples of some activities that are not regulated by SC, just to give a sense on what the boundaries are, right? I think in general, like if you're building a Web3 project, you're just in your house doing some coding, deploying on the mainnet, testnet. That's something that SC don't bother. Nobody cares. You can do whatever you want, right? So don't need to worry about that. Number two is if you're, for example, giving out tokens for free, right? I think I actually get asked a lot, can I just issue a token and just give it out for people to use? That's something that's not regulated as well, because you're not fundraising, right? You're not saying that if you buy this token from me now, I promise you this in the future. So that is not regulated. And finally, as you can see from some of the NFT marketplaces that we have in Malaysia, you sell an NFT, regardless of what type of NFT it is, if it's not for the purpose of fundraising, meaning you're not saying that you buy my NFT, I'm going to promise you A, B, and C, it's not regulated as well. So this is like the first misconception that a lot of people typically have. And I will go through my next slide, and then I'll take a pause to see if anyone have any questions before I go into the next topic. So the second misconception that people typically have, and this is what I typically hear from investors, is that they're always very afraid. Hey, I got scammed. Can I report? Right? Or they somehow something happened with their trades on a different exchange, and then they just don't dare to just bring it out to light, right? So I think the misconception is that investors are typically very afraid if they either got scammed or they are using an unregulated platform. They feel that if I do that, then if the regulators find out or the authorities find out, I'll be caught. But that is actually not the case. So what's the reality is that the regulators, what they do is they advise Malaysians to invest in a regulated platform. It's for the purpose of investor protection. So what do I mean by that is that in case anything happens, you always have a recourse if it's on the Malaysia platform. Just take the recent Luno case, for example. Something happens on the Luno exchange, they could take it to Malaysian court and get it sorted out there. But if the same thing, Malaysian investors were to face the same issue and say, I don't want to name any exchange, but a foreign exchange, right? First of all, you don't even know which court you take them to, right? Like for example, FTX. Everything, even if Malaysian investors, anything happens, everything's sorted on US court, and how are you going to get involved in those processes? So it's really for the purpose of investor protection. And what that really means is that as long as you know the risk, investors, you guys have the right to decide where and what you want to invest in, right? I was from the SC and I have account in some exchanges on the SC's list as well, right? So the whole point is that I think the regulators cannot go out and say you can choose yourself, but it's something that in regulation, if you look at the laws and everything, there's nothing against you if you decide to, by your own accord, go to a different exchange and trade there. Yeah, you just need to be aware of the risk that comes with it. And So I think the third point over here, just to emphasize again, is that if you are investors and you are investing in non-regulated platforms, you are not at fault, especially if you are the victim of scams, right? Do come out and at the very least, warn your peers that this is a scam, so people don't fall into the same trap again. If you don't want to bring it up to authorities. Of course, if you bring it up to authorities, I think the police, PRM, they do, I think between the few authorities in Malaysia, they've started to have people looking into crypto scams. But I think that being said, if you go out and invest in other platforms, one thing that you just need to be aware of is tax and also AML, which applies to anyone, right? And tax is, like I said, you charge based on the profit that you earn, and AML is just to make sure that whoever you do transaction with, they are not involved in any crime syndicates or money laundering activities. So what the SC, my last point for this slide is that what the SC actually and Bank Negara actually regulates is that they hold the platforms or businesses that operate in Malaysia accountable, right? So investors can choose where they want to go. But for exchanges, for example, if you're not licensed to do what you're supposed to do in Malaysia, SC would, basically you are not allowed to actively promote the Malaysian. So that is what the SC would do to protect the market over here. And that's why you'll see a lot of exchanges being put up on SC's investor alert list. It's basically a way to tell people that, okay, these are exchanges that are not regulated by the SC and they're actively promoting Malaysia. So that's basically it for my part one, which is crypto regulations. I know there is a lot of information that I've dumped on you guys in the very late night at 8:30. So maybe I'll just take a pause first to see if anyone have any questions, comments, or complaints that you guys want to voice out. Yes, Nicholas, my twin. Yeah.
Okay, so I noticed from your list that all the platforms you show are all not a problem.
Yes.
But because from my point of view is that while us as that sort of companies can build decentralized applications,
Yep.
they run on the Ethereum blockchain permission free. And let's say you need the NFT from LP solution for the fund. Theoretically, this is owned by you because when you mint it, you use your own wallet.
Yep.
Your wallet is MetaMask. So let's say if you lose your LP for whatever reason, would the developers, for example, if the sort was founded in Malaysia, be held accountable or more?
Very good question, and this is also something big happening in the regulatory scene in the world as well. If you guys know ISCO, basically it's a international group of securities commission across the world, right? They recently published their sort of principles on DeFi. I think to answer your point, right, and also taking some points from that paper itself, in general, like I think you use the word theoretically. So theoretically, if a DeFi protocol is decentralized, it's really bias beware, right? If you're investors going in, you need to know the risk. So there's nothing wrong about that. But I think what the paper says is that in reality, there are different levels of decentralization, right? There are some protocols where I know some that basically everything happens off chain. It's just like maybe everything just gets, after everything settles off-chain, something just gets sent to the blockchain and records there. So there are protocols that are more centralized than others. And for those protocols, then that's where I think the paper advises the different countries to actually hold those people that have control over the protocol accountable. Right? So I'm quoting the paper. I would not say if I agree or not. I actually don't agree with that, but I think even to the extent of actually holding core developers accountable, if the core developer have what you call it, have like a lot control over the protocol itself, and something happens to the protocol, right? But the paper also recognize that there are some protocols which are more decentralized, and for those protocols, you are generally fine. I know it's a sort of a roundabout way to say things, but that's the reality of the fact, right? I think So I think probably the conclusion to this is that, to be honest, as long as you make sure you're not doing anything hanky-panky, you're not trying to rug-pull people, generally regulators will not spend too much effort to come and catch you, right? Regulators typically take action if and only if like there's complaints, because there's just so many different projects out there, right? If you are on everyone's good side, nobody complains, you generally you're fine, right? And you can see actually even quite a lot of Malaysian projects, they have gone quite large in Malaysia, even outside of Malaysia, and they're doing quite well as well because there's no complaints to the regulators. Okay, thanks. Any more questions? I think I'm also short on time, so I'll just move on, and any questions, I'll just we can bunch up at the end. So I just have a few slides on token crowdfunding, which is what my company currently does. So essentially, what is token crowdfunding, right? I think it's probably a new term to you guys as well. You guys probably can guess from the phrase itself. Essentially, it's just using token to crowdfund money from investors. So it's basically something that we use to catch all of the different offering terms that you commonly hear: ICO, IDO, IEO, and STOs, right? And the reason for that is because in Malaysia, we are quite unique because in most countries, you're probably able to be regulated to do STOs. I think most countries have that, but not really ICOs, like maybe except for Thailand, for example, that you're regulated, not really as well. But yeah, I mean, most countries, they don't have regulations for how to do ICO in a regulated manner, or IEOs. But in Malaysia, we are quite unique because the regulations allow us, pitchIN and KLDX, to actually do the whole spectrum of token offerings, which is why we have to coin this term to cover the whole thing. Promote the campaign itself, and if it's successful, the tokens will be, the smart contract for the tokens will be audited and released to the investors. And I think a key point here is that unlike the typical IPOs that is probably it's not regulated or IPOs, the funds will only be released to companies by batches based on the milestones that they are committed to. So this is the benchmark essentially. Right? If you give the company everything, then there's not much to stop them from just taking it and run away. But for here, in our case, they have milestones that are committed to when they send us the application, and we hold them accountable to them. And finally, the companies can choose to list on any exchanges, local or global, preferably one that's regulated in any country. And yeah, you help them with that as well. For investors, quite straightforward. You invest on pitchIN, you make payment, and your funds will be held by a trustee. If the project fundraising is successful, then the money will be given to the project. If it's unsuccessful, you get the money back. And for pitchIN, our role is to act as a mediator between investors and issuers, while the commitment that the issuers have promised is not yet being fulfilled. So if anything happens, we can hold the issuers accountable on the investors' behalf. And you can also withdraw the tokens from our pitchIN platform, of course, subject to typical KYP and how mature the project is and things like that. Yeah, so I think just to end off with this slide, So actually what we are trying to do at pitchIN with Token Crowdfunding is two things really. First of all, I think we are in a very unique position to actually bridge, be a bridge for established Web2 companies. Think of, for example, your custom, for example. The big tech companies, if they want to explore like their own Web3 project, I think it will be very interesting. But right now, in most countries, there's not really a regulated or safe space for them to do it. So I think that's our first goal is to be able to support these companies if they want to venture into Web3. So essentially, it's you can think of it as a broader industry for RWAs. And the second thing that we also want to do is also we want to be able to have a product that helps our homegrown Web3 projects raise funds from across the world. We are not there yet for sure. I think there are still things like stablecoin and whatnot that are still a bit unclear, but that's something that we're working towards as well. And if you want to connect, feel free to do so. This is my number. You can get my Telegram, my LinkedIn, everything over here. And if you want, you can also scan the other one, which is the socials for pitchIN. I think in it there is a sort of a subscription list if you guys are into those sort of things. And we'll let you know once our first deal is going to launch, which is expected to be around March or April. Alright, that's basically it. I am a bit out of time, 1 minute late, but hopefully it's fine. Alright. So if you have any questions, just drop me a WhatsApp and I you guys from there. Thank you. Thank you, Nicholas. So right now we're going to move on to the main topic of today, which is inscriptions. Chin Yong? Chin Yong? Yeah. Okay, so welcome Kim Chin Yong to the stage. Hello? Yeah. It's on me. Hi everyone. Hello? So today we just talk about inscriptions. Technically we're just selecting a topic because of our topic to discuss. Technically, actually there are two topics you also can kind of go, right? We actually think about like either we talk about staking, either we talk about modular blockchains, Celestia and stuff, or we talk about inscriptions. They was like, hey, like this is something fun. And then, at least at the time, December, not saying fun, but something that's funny things that I think as well. So if you interested to learn about, let's say, staking or even modular blockchains, right? Maybe we can talk about it in coming meetups if you don't have guests. But yeah, like, today let's talk about inscriptions. It's something that is, I think everyone heard about. Let's say inscriptions, causing all the blockchain to be congested, Bitcoin fees are super high, all the block fees are fully filled for Bitcoins, right? People heard about it, but I think sometimes maybe we don't know about how in details it works behind the scene, and how these people technically hack the Bitcoin blockchain in some way. And there's a lot of debate happening there as well, which I find it pretty fun in some sense. It's like it's basically like a parody of NFTs or even like tokens around in the Bitcoin space, which is pretty cool. But the focus will still be around inscriptions. Since we are ETH Beta, we're going to talk about how inscription work on ETH chain as well. But we're just going to start with a few things. If you only talk about inscriptions, right? If you are only looking at the EVM space, these are a few things that happened recently. Where, for example, Arbitrum, on December, 90% of the transactions are actually inscriptions, and they actually caused the Arbitrum network to down for 1.5 hours. I guess the ETHKL team can relate to it a lot because Arbitrum was down as well. Down is like no blocks technically. But yeah, this is what happened, right? And you can see the power of inscription that stress tests L2 network technically. Most of the network stress tests, and Arbitrum is an unfortunate one.
And others as well, like for example, Tor network also attacked by Inscription, causing the TPS to be 1 TPS, right? Very cute one, right? 1 character per second, even so there. If you're on any other network, right? Just to give some context, initially during their stress test, they say we can do around 20k 20k TPS. But when this happened, it's 1 TPS, and there are millions of transactions actually pending at the time. So if you look at the source, maybe I'll just do it later. And like Avalanche, right? Avalanche, and when the institution comes in, the fee spike to 1.5k. So there's a very funny tweet. I think I forget the screenshot. I don't know where I see it, but basically it's like I want to trade 1.5k and the fee is 1.5k, right? So it's really funny as well, and it happens to a lot of other chains as well, like Celestia, Anthos, Sui, Solana, and more. I think we can refer to them for more details, but maybe we'll come back to this later. I'll just talk about how this inscription thing come about, right? Yep. So it actually started as Ordinals on Bitcoin. Anyone heard about Ordinals before? Ordinals. Anyone trade Ordinals? Own Ordinals? No. Okay. Okay. Yeah. I think just everyone said, "What is cool?" and I'm not gonna do it. Yeah. So, which is what is Ordinal? I just simplify just this sentence. It's basically people are trying to inscribe images or anything on a set. So for context, I think everyone know what is sets. Sets, right? So sets is basically a smaller unit of Bitcoin. So 1 Bitcoin is 1 Bitcoin. One Bitcoin is actually technically 100 million sets. So it's the smallest unit of Bitcoin itself. Set it's technically called Satoshis. So a funny thing is about like why ordinals, right? Because there are two parts of it. Ordinals is order, right? What actually happens is that every sets, which is a smallest units on Bitcoin, have a number technically. It's ordered in some sense, like sets number 1, sets number 2, sets number 3, sets number 4. So in order to like identify like which you actually can uniquely identify sets, right? So because each other have a number. For example, today we come in here, the first one they come to the space get a number 1, and the last one get number 40, for example. And all of us are uniquely identified through a number series, right? So it's ordered in some sense. So that's why like people what people are trying to do is that okay, in these smallest units of Bitcoin, we just there's a metadata field that you can kind of put there, which is called they call it witness data, and you can just inscribe things data into it. You can inscribe a base 64 format for images, for example, or you can inscribe any hashes or anything around it. And the funny thing is like people are just saying that this is basically just finding a loophole in the Bitcoin space where I will just go to the next slide. So this is the first ordinal that on Bitcoin itself. So you can go to this is called ordiscan.com, and this is the first inscription. Or you can call it ordinals. Yeah. So this is the first ordinal. Let's look into it. I think let's give everyone some take a look in terms of how the transactions and things looks like, right? And how actually ordinals looks like from an explorer perspective, right? Because technically, if you go to a normal Bitcoin Explorer, you don't see anything. This is just a normal sense. But in ordinals, if you can only scan, you can see actually how this ordinal actually looks like. Right? But if you want to take a look, okay, how it actually looks like, you can see. So you can take a look at this. For example, this is a transaction that actually minted this Satoshi, right? So you can take a look here. They're using bamboo space. So for example, you are normal users. You look at this loading. Okay. Yep. So if you are normal user, you look at the bamboo space, which is basically a explorer for Bitcoin. You actually don't see anything. Just like as usual, no pictures, no something. If you go to the scan, you see the pictures and something like that. Nothing here. But what you can see actually, if you click on the details, you can see there's something called witness data field, right? So this is witness field. So what it does is that this is basically just a bunch of data. It's actually a compressed version of the image, in some sense, in the particular format. So what it does is that they just put the data of image into a certain format, sometimes it's base64 or any other formats. Or for Inscription, which is a version of Ethereum Inscriptions, it's using base64. But in Bitcoin, it comes from any different formats because people not just put image, right? They also put games sometimes. Like people literally put a game inscribe a game into a set itself to become an Ordinals. Or and yeah, like this is what they do. Basically, it's like when they make a set, in some sense they inscribe the witness data, right? They inscribe some data, which is the image, for example, and since it's recorded in the blockchain forever and it's in the blockchain representing the assets as a witness data, it is forever in the blockchain. It doesn't disappear at all. It wouldn't disappear already. So this is what actually happened behind the scene. And people actually build this, all this scan to actually, because if you just look from a normal perspective, you don't see anything happening. So people actually build this on top of this to actually have visibility in terms of the ordinals, ordinals, NFTs, or even images, videos, or any form of it. Yep. Cool. Yep. So as I mentioned, basically just record some data in the Satoshis, and people starting to inscribe images, GIF, and videos, even something like that. Like so, that's one of the craziest things is that people trying to inscribe games. It's like a very pixelated game, and it technically works. I didn't find the tweet, but I can find out. Internet say Ordinals games or something like that, people actually make it work, and that's pretty cool in some sense. And after this, I think the speculation force actually come in, they actually turn Ordinals into something real. Not say real, but people are speculating for. Because at first when Ordinal comes in, at least when we observe this, is just the founder is, I think it's called Nick, something like that. I think the founder is called Nick. He started this Ordinal thing, and people were just discussing, oh, you're hacking on internet and something like that. But when people treat it seriously, when players like Yuga Labs, Magic Eden, or even OKX actually spending more time and money into building even an Ordinals marketplace, etc., and that's why the speculating force comes in, and people trying to put more attention to this. And since then, more and more hacks coming in some sense, it's like hacking way of doing things. So we talk about Ordinals, which is just inscribe images or any media format. It could be anything technically, but this is what people can treat this as. But let's dive deeper. So yet another thing that new thing that come by is called BRC20. So we have Ordinals videos like we have NFTs on Bitcoin, right? And it's inscribed on chain for each set, right? It's an NFTs. How about let's do not fungible tokens as well? So that's why BRC20 comes in. It's basically, I just think of it as like a parody of BRC20 on Bitcoin network itself. So how it works, I think it's really interesting. Not so interesting, but people just playing around it, and the idea is quite smart. But I would say also there are issues as well later. So BRC is a parody of BRC20. They're just trying to implement fungible tokens on Bitcoin network through inscriptions. Inscription just basically inscribe some data into a blockchain. In Bitcoin specifically, is on the witness data section. Yeah. Witness data is basically, if you are familiar with Ethereum, it's like core data. But initially, they want to do, they introduce witness data through two upgrades, which is SegWit and Taproot. So SegWit is basically they introduce witness section so that they can store signatures in the witness section, and Taproot actually increases size to actually 4 MB. That's why I can do a lot of things there. For context, like witness data, you can actually store 4 MB of Bitcoin. Core data for Ethereum, core data, which is a similar thing, only can store like 76, 80 GB, KB, not GB, KB, which is significantly smaller. So that's why you can play a lot more things with on the Bitcoin space itself. You can extract more stuff technically. So yeah, what it does is basically use Ordinals to inscribe JSON text onto Satoshis. So how it works, let's go in one by one. Here you just see just bunch of numbers. What does it mean, right? Then maybe we can dig deeper into it. So each of these is a JSON file. It actually represents something. P actually represents the protocol, or it's called token in some sense. P BRC20, which is a protocol which is using a standard in some sense. Say BRC20 is a standard, ERC71 is a standard. They just do it as a BRC20. So how it works is that in future there will be actually it's on the next slide, but in future, so once we have this available, and the P is represent the protocol, And you can build a BRC20 indexer service, index all the BRC20's transactions in some way. But I'll kind of mention how it works later. Coming to this, so there are actually three things on BRC20, which is deploy, mint, and transfer. It's actually almost the same as BRC20 tokens, technically. So P represents protocol, OP represents operations. So you get operations means that it's a deploy function, it's a mint function, it's a transfer function, right? And T actually is a ticker name, so it's Ordinals, either it's OD or let's say any other token names works as well, right? To represent what token you're trading. Max is basically the max supply. It applies on the deploy function only because you deploy a token, you need to tell the max supply, right? What's the maximum supply of the token itself. Limit is basically the number of tokens per mint. So after you deploy something, anyone can mint the token, technically, as long as you create a Satoshi. By inscribing the data in there, then you technically, in some sense, mint the token, right? And AMT is the amount of token for mint or transfer. So let's say you want to mint 1,000 tokens, then you work there. You can see, for example, this example, it's a BRC20, you mint ordinal token, and it's 1,000 tokens at a time. But you can see here, there's actually 21 million, and the limit of minting is 1,000 at a time. So this works technically. It's the same thing. And for transfer as well, where it's BRC20, you transfer ordinals with an amount of 100. So actually kind of front run it a bit. So it's the same thing. So let's take this one. You deploy a BRC20 token called ORD with 21 mils total supply, and the limit of minting is 1,000. And for mint, it's actually the same. It's basically minting a BRC20 token called ORD, which is basically this standard with an amount of 1,000 of them. Means that if, for example, this is called, for example, this is actually deployed, right? And you will have a 21 mil max supply, but you have 0 circulating supply. In some sense. But after you make a mint function call, this one function basically describe the mint BRC20 standard. You mint 1,000 of them, then the total supply will still be 21 million, but the max the circulating supply will be 1,000. Transfer as well, so you can transfer your ordinals to others, right? So you transfer ordinals, transfer BRC20 token to others. So how it works is that you technically transfer ordinal, you technically transfer ordinal to others by inscribing the details here saying that you actually transferred 100 ordinal tokens to some other parties, right? It could be just within the transaction witness data itself. So that's basically it. Yeah. So okay, how to track token flows, right? So you think about that, it's technically you just for any transaction you make, you just inscribe metadata. Right? If you write code before, it's the same thing where you make a API call to data. Like if you don't, it's technically it's recording the blockchain, but it's not the consensus of the blockchain itself. Like blockchain doesn't recognize this as part of the consensus, right? They just execute because it's part of the data. So like there are no, because Bitcoin is not a account system, like how there are further questions which I will ask at the time is like, hey, how to know who own BRCs, like, and their balance, like, hey, how you know that you have 500 left, 1,000 left, how I know that how many mints you did, right? And also how can we make sure that the token mint doesn't exceed limits? Because technically anyone can inscribe, and the limit for minting is 1,000. If I mint 10,000, you stop me, right? For example, if it's an Ethereum smart contract, you will actually fail because it's a required function to make sure you will mint more than that. But in this case, like, who will stop you? No one will stop you, right? So these are the questions that I have. But the problem is like, because Bitcoin don't recognize this, like, who will recognize this? It's basically a social consensus in some way. Say, we recognize BRC20 is an important standard. We like this one. But Bitcoin doesn't care about it. The Bitcoin network doesn't care about it because it's not part of the consensus. So what they do is that you are very reliant on off-chain events like BRC20 IO to track them. So let's take an example of like how the BRC. Take a look at the BRC20 website, and yeah, so all your balance, all your how many supply, the circulating supply of token are all tracked by the centralized indexer because Bitcoin doesn't recognize it. It's not part of the consensus. It's very slow, but you can see the website look damn fucking sus. Okay, scare my side every time I look at it. But yeah, it's still loading. Yeah, but you want to put facts. Right. Yeah. So yeah, these are some examples where people deploy, right? For example, I want to create a FTP BRC token. So what I do is basically I just refer to here, I just call the deploy function, right? Not call deploy function. I used to it in Ethereum terms, but you technically inscribe the Ethereum the deploy JSON format, right? You just technically inscribe it, and the indexer will actually look at all the blockchain transactions, see which one actually have this specific format of JSON, and the formats are right, and the fields are all filled, then they will consider as a new token in some sense. Yeah. So yeah, these are some examples. We look here. Oh, no internet. Okay, I think it's getting worse, so let's come back. Okay. Why it doesn't work? Okay, but it's okay. I'll come back to this later. Okay. Yeah, so this is the example just I mentioned, BRC20. I actually wanted to go to this chart as well, but it's okay. Because the view chart I think wouldn't load with this in that speed. But yeah, you can see like the Ordinals fee paid over time. Actually, you can see there's a significant spike here, the daily fees and the total fees for the year. You can see actually daily fees spike a lot. It's basically during the launch of BRC20 tokens, because it encouraged everyone to make transactions and also power the gas fee because they want to get executed first, right? For example, you want to someone release a token, BRC20 token with 21 mil supply, and no one actually minted that yet. Because the first few minutes are technically free, no one can control. And as long as you do it first, then you get free tokens in some sense. So people are just pumping the gas fee, just want to get executed first, and that's why during that time, the fees actually increase significantly. This is during the BRC time. This is around the Ordinals NFT time. This is BRC time. And here is a significantly merging of both BRC and the Ordinals. Just getting a boom there. Yeah. So if you are paying attention to the Bitcoin space, right, there's actually a lot of interesting discussion going on where the Bitcoin OGs, the laser eye people say that we want to we want to make sure we don't have Ordinals anymore. All this shit, inscription, shit, we don't want to have that. We want to make sure that no one can actually describe data through witness, the witness section, right? But then there are other Ordinals maxis that say that no, you are killing innovation, right? Bitcoin is a good store of value. Now you can do something on the chain, it makes it interesting, right? Some examples of these kind of people are like, for example, the Taproot Wizard guys, Eric Wall, Yugi, all these guys are like supporters of Ordinals, while those Bitcoin laser IOGs are like no Ordinals. And I think today I want to call Bitcoin Dev actually want to make a commits to actually take this away, but it's rejected at the end. So quite funny things, you can see like what didn't happen there. So, yeah. But if we kind of mentioned about inscription on Bitcoin, right? I think maybe it makes sense for us to go to on how it happens on EVM chains. But I'll say that it's technically just copy the same thing. Just that EVM chain EVM chain is slightly different. And because it didn't read out, we need to talk about some deep stuff. But so let's take a look, right? So in Ethereum, there's something called inscription. I think this happened around April or May time. Yeah, I think it started May, something like that. Yeah, but they've been there for some time. Inscription. So technically, it's just giving the ordinals, but just inscribing data into the core data itself, right? So in Bitcoin, it's witness data. In Ethereum, it's core data. So I actually want to give you an example in terms of like how it looks on the scan, which is our friend's favorite product.
There's an issue or
Internet. Oh, no, cannot reach.
my data.
Yeah. Cannot. I think. It's okay. Let me see. But I think it's important for us to actually take a look into this so that we can know how it actually works behind the looks with us. Wait, let me take this one first. Oh, okay, so here's an example on like how an inscription looks like. So look at this transaction. It's technically a normal transaction, which is basically minting a new inscription, right? So let's go to inscription. This inscription protocol. I think I just take the one on the top, something green color. Yeah. Yeah. So this inscription, just to be frank, I don't use this stuff, but just something to explore. But yeah, basically like this inscription website, what they do is they basically index all this shit. Okay. Yeah, so you can look at here what the data actually looks like. So this is a transaction where they actually made inscription. And interesting thing is that you can look at here. So the scanner can click more and look at the input data. So they put the core data in this input data section. And if you look at this from data perspective, you can see that it's the data, it's the image, it's in the base64 format. So what it does is that, for example, let's say this NFT, right? This NFT is basically inscription NFT, Ordinals NFT is basically inscription NFT. The inscription NFT is basically inscribed in the transaction itself, and as it's recorded forever in the blockchain. So what they do is they turn images into a base64 format, and it's a very common thing that the developer does to encode it into a readable into a text file. Yeah. So this is what it does, right? So you can see that he made this, you say from and to himself, and he made this NFT. So he's actually the initiator of this, right? Okay, then the funny thing is, okay, what if I want to sell it off, right? Right? Because you made it's in the transaction. Like, how can you sell a transaction? Like, this transaction hash is for you, cannot. This cannot happen, right? So what happens is basically like you want to transfer something, you actually look at the core data. They just say, oh, I'm going to transfer the NFT and this is core data. I just transfer to this address. So you can see this is to this interacting with this technically interacting with a smart contract, and you transfer to this this address. So this is input data, and you just tell the protocol, I'm just going to transfer it to this address, and the protocol as a centralized indexer will index it. Oh, the NFT owned by zombies.eth is already transferred to 0x52C8 something. Wait. Yes. Yes. Oh yeah, you're right. So yeah, I think I'm confused. So you transfer to these D7 users saying that this NFT on this transaction hash belongs to that person already. Yeah, so sorry, I misunderstood it. So yeah, it is like you're transferring to this person, 0if this transaction hash, which is basically the record of the NFT in inscription itself. That's good point. Yes. Cannot, you only can check on the website because it indexes it. You mean the yes? Oh yeah, this log, right? Yeah. So this is yeah, you check that this is the owner, this potential inscription ID, this is inscription ID. Yeah. Because each institution they have a certain ID itself. I think this is the example. So you see this is 5 months ago. I click here. It mean the inscription.
Yeah, but I think on each inscription, right, they have like a certain advice on what event logs they meet, but then not everyone meets it.
Yeah, that's the thing, I guess so. Because you can really do anything you like. You can do it on inscription saying that you want to sell something, or you can just a usual transaction, 0 if, pay the gas, put the call data in, then it works as well. Because at the end, if inscription will actually index those data, and that's the problem with so for example, Elon Musk or some Bitcoin maxi, Ordinals maxi, not Bitcoin maxi, but Ordinals maxi will say that, wait, bro, this is the only way you can store an NFT image, let's say an image, into a blockchain itself, because you inscribe it technically with transaction data, for example. But the problem is the blockchain consensus doesn't accept it. No one knows this freaking hell is an NFT. And no one is in the blockchain code itself or the consensus code of Ethereum itself or Bitcoin itself doesn't recognize this. You can store it, but they have no meaning, right? And you need to rely on centralized sources to index this data separately. Then what's the meaning of doing that? That's my argument. And the argument of like people who don't like inscription as well. And if you are in Ethereum, you have all this data, like there are no meaning for. You have account model, you have smart contract, then no points for doing this as well, right? So that's the argument we have. And I actually have a few more slides, but I think we are short of time. But there are also other BRC forms like Avalanche, Arbitrum, Solana. So the one on Arbitrum costs Arbitrum to went down, but if you take a look at all these projects, all of them died. No more Twitter updates anymore, nothing there anymore. They just, it's there for fun. Yeah, basically that's it. Nothing else. Thank you. Yeah, any questions? Yes. Yeah, limit of size, right, of inscriptions. Yes, there is. I actually have note. So for Bitcoin, it's more happy. For Ethereum, I haven't checked the core data size again. I think 70 something, 60 something KB. I write my notes. 1 second. I think I write it somewhere. Yeah, this is 4 MB of data for Bitcoin. I think ETH is around just 2 digits KB. Yeah, so it's significantly smaller than ETH. So that's why people say that Bitcoin is more fun. You can put a game into it. Really. So if you take a look online, like Taproot, Wizards. Basically, these guys, right? They just basically I just come back to the first slide. Views are my own. Okay. Yeah, this one of the emojis itself, they are basically come from a Taproot wizard meme in Bitcoin. So Bitcoin used to have in the early days of Bitcoin, when they want to do things on their subreddit, they just want to say, oh, how to make things fun, right? At the end, this is the Taproot wizard meme actually come by that people draw this pictures, say that magic internet money, then like the meme stuff, right? And when Ordinals come by, I think Aaron Wall and UD, these two are the KOL in the Bitcoin space, saying that yeah, they just started this and kind of blew up. And yeah, this is one example, and there are a few others for their games. I think you can search it somewhere where Ordinals game. I think there's something that and it's pretty fun. People can take a look at how the game works. I have videos. And for example, you want to put your pictures in there, no problem. Turn it to a format, then it works. Yeah.
What is the Ethereum in Solana?
I think Solana they have a specific format. I forget the name, but it's technically within I'm not very sure. They have, I think there's a standard something. I forget the name, but basically they are leveraging on that format to inscribe data into a transaction itself. Yeah, because it's sometimes different. They are not the same as Ethereum as well because it's not even compatible. But yeah, they have something certain format. I'm pretty sure there's a term that represents it. It's a standard. Yeah. If there's Solana it's here, then they can have more.
Going back to the question of the site, let's say all of a sudden have growing number of users, creators starting to use Ordinals like crazy, maximizing up until 4 megabytes in Ordinals. Would that also be a worrisome part for, let's say, node operators, especially when it concerns the exponential, maybe it's not exponential, maybe it's more like polynomial growth of
Yes.
data sizes, and therefore it might actually either slow down the network,
Yeah.
let's say it was included in the blockchain.
Yeah.
So that is
Yes.
more
Yeah, that's why the blockchain the block size, right, to max the cap of the block itself, so that it wouldn't technically increase the hardware requirement, but definitely storage will increase. Because if you look at the Bitcoin chart, right, it's been a long time since Bitcoin had full block. Since a very, very long time. And recently it's always full block. And when it's full block, it means that you earn more fee. And all the miners they're fucking happy. They're freaking happy because they earn more money.
like a technical push up the smaller minus.
Yeah, it is. So it's not rating as software. For example, Ethereum aim is to be like have very the hardware requirement should be very, very low, right? That's why the block size cannot increase. And given that case, so that's why you shouldn't allocate too much space for, let's say, core data or witness data, so that people can play around with all these things. And yeah, by looking around the Bitcoin forums and like Bitcoin discussion between the Bitcoin Maxi and the Ordinal Maxi, they're funny. And I just go there and just laugh. Yes. I think that's all right. Anything?
Have you heard this argument by Eric Wall about how Ordinals and institutions allow for fair distribution of tokens? That's one counter argument, because now with all these regulations that exist, projects are forced to token raisers or sell their equity to VCs, where previously with ICOs anyone could buy a share in the project. And with institutions, you really enable this possibility for anyone to be able to do that.
I know it. I have no thoughts. I just like to look. I just like to look at politics. I'm joking. No, I'm joking. But I have no thoughts on this. I just don't think if you look from a efficiency perspective, like you want to work on a more efficient platform or less efficient, right? Although the argument they always have, why you need to do NFT on Bitcoin, why you need to do tokens on Bitcoin, it's basically they say because it's where I have the most capital, right? Like all this capital on Bitcoin itself, which is have no use, you just initially it used to be a P2P protocol, but no one used a P2P protocol, and there are no applications, and at the end it becomes store of value, right? And the argument is saying that just want to have more economical activities that happen around the Bitcoin space, so that the money can be more interesting in some way. But I just don't agree personally, but I don't have any more thoughts. I wouldn't represent any of those. I just look at the sideline. Wow.
Do you know how Ordinal marketplace works? Because like we see just now, to transfer Ordinal either BRC or NFT inscription, we need to the transaction need to initiate by the owner. So let's say I'm interested to purchase this inscription, how they solve this problem where I transfer money to them and then they just run away and do transfer that inscription back to. Yeah, just wondering how those.
Yeah, I don't know in details. That's the truth. I actually don't know as well. Yeah, I think you can take a look at. I don't know. But for both Bitcoin specific, I don't have a good idea. But I think the biggest one on Bitcoin is like few emerging one are like OKX. I think OKX is one of the biggest one. Doing well, and the biggest Ordinal marketplace, I forget the name, but it's not OKX. OKX is an emerging one, and it's one of the biggest like. New as quite a lot Ordinals. I don't know. Sorry, Imagine don't have a lot.
But they are more on the Ordinals and then
They have marketplace just for market share. They have a lot of market share. Anyway. Yes.
Just out of thought, if Bitcoin network can't handle inscriptions, How can they handle if there's 1% population in the world?
Technically, they can handle, just that you are maximizing. It's like the car running 100% all the time, right? Because like the block space is fully utilized, and it's great for the bridge miners to actually incentivize because they have strong hardware. And while for those small players, you are just losing out because the block space is always full. More data comes in, you need to increase the hardware requirement to actually pay. To actually, it's because of the poor system, not to forget, to actually be competitive. But in terms of like putting 100 and 1,000 of them, I think in the scale of Bitcoin, it wouldn't be a place for people to make transactions. At least it's the truth. Without Ordinals, it's still the same thing. Like the fee is so high, and even for Ethereum, it wouldn't be I still believe that Ethereum wouldn't be a hub for financial transactions because fees are high. And that's the design trade-off. Right? You want to be low, and you'll be like Solana, right? Solana. But the trade-off is that it's technically you face other problems like spam transactions, right? Because the fees are so low, the gas fees are so low. Then you can actually spend a lot of transactions to actually have maths and math and sense. There's a different trade-off, right? You want low hardware requirement and your block time to increase or your block size to big. And if you want to have super fast, super efficient, then your hardware requirement will be super high. And you also have others risks such as EV risk and something like that. But I don't, it's my opinion.
I think one argument from the technical reasons are that they want to push for all these Ordinals, yes. They want to show that Bitcoin cannot scale given all these things, and therefore they can argue for a soft form of the Bitcoin code to include these covenants or things that allow for the ZK rollout.
Yeah,
that's the political.
That's the thing. People are trying to do ZK rollouts on Bitcoin. That's the thing. Yeah. And all those are emerging subsets as well.
It's a political movement to force the Bitcoin mainstream to agree to allow for these. Otherwise, your cheap gets spent.
And the Taproot Wizard literally raise money to do publicity. That's the thing they do. Funny thing. Okay, that's all. Thank you, everyone.
Okay, so thanks everyone. So right now, it's Markman and the past session. We have the room until. So guys can come in. I think there's not much good left.